Questions to ask when shopping for an interest rate. When it comes to determining your interest rate, there are a couple of things that we'd like to share with you. Basically, why interest rates can vary and when you should lock it in. When you shop for a mortgage, one of the things you'll probably ask is, what's your interest rate? The interest rate is the one thing that determines your monthly payment and how much interest you'll pay back over the life of the loan. It also depends on the type of loan that you apply for. The interest rate on an adjustable rate mortgage will start out lower, but may increase in the future. For a fixed rate mortgage, it depends on the term of the loan. The interest rate on a 30-year fixed rate is a little higher than a 15-year mortgage. Your interest rate can also depend on your credit score. The higher the score, the lower the interest rate. But here's the thing. Interest rates can change several times a day, just like the stock market or gasoline prices. So when you're shopping for a mortgage and calling around for interest rates, you need to make sure that the rates you're quoted are within minutes of each other, or they simply won't be comparable. A couple of other questions to ask are, will you lock in my interest rate, and for what length of time? We can usually lock in your interest rate once your loan has been approved. You also have the option for the length of time to lock in the rate, which depends on your closing date. But one of the toughest decisions you'll need to make is when to lock in your rate, because no one, not even us, can predict what rates are going to do. You will have the option to lock in your interest rate for a specific number of days, or you can take your chances and not lock in your rate until it's closer to the closing date. Once you decide to choose an interest rate, it's locked, even if the interest rate increases or decreases while you're waiting to close your loan. Think of it this way. Let's say you go to the gas station to fill up your car with gas at a certain price per gallon. Okay, so you filled up your car and you drive a mile down the road and find that the gas price has decreased simply due to the worldwide market price. That's what happens when you lock in your interest rate. The money needed for your loan is allocated exclusively for you, including a certain interest rate, to make sure it's available when it comes time to close your loan. And if you decide not to lock in your interest rate until very close to the closing date, you're taking a gamble as to what the rates are going to be when you finally lock it in. Now, while the interest rates are important, the critical thing you need to ask is, how will you work with me to get my loan approved and help me get the best interest rate for the loan I'm applying for? So thanks for viewing this mortgage education class, and I would love the opportunity to review loan programs, interest rates, and how I can help you buy your next home.